What is going on, XRP Army? Welcome back to the channel. Today we are not talking about rumors. We are not talking about maybe partnerships. We are talking about the single most critical infrastructure update in the history of Ripple, and it just happened right here in the United States. While everyone was distracted by the daily price candles, Ripple quietly signed a deal that effectively hardwires the XRP ledger into the banking software used by nearly half of the US banking sector. The headline is "Ripple just changed everything," and that is an understatement. We are looking at a direct integration with DXC Technology's Hogan platform, a system that manages over $5 trillion in deposits and 300 million bank accounts. This is the Trojan horse strategy we have been waiting for. In this deep dive, we are going to break down exactly what this DXC integration means, why the new Ripple Treasury product is the killer app for corporate America, and how this moves XRP from a speculative asset to a structural necessity for the US economy. Let's start with the DXC Technology bombshell. Most retail investors have never heard of DXC, but every banker on Wall Street knows them. They provide the core banking software, the actual code that runs the bank accounts, for hundreds of major institutions. Ripple has officially integrated its custody and payment solutions directly into this software. Why is this a game changer? Because it removes the friction of adoption. A bank CEO doesn't need to adopt crypto anymore. They just need to update their existing software, and boom, they have access to the XRP ledger, RLUSD, and real-time settlement. This isn't a partnership, it is an infrastructure upgrade. It turns 300 million deposit accounts into potential XRP endpoints overnight. This is the change that the title refers to. It's no longer about convincing banks to join RippleNet. It's about turning the feature on for banks that are already there. We need to talk about Ripple Treasury and the GTreasury integration. In late 2025, Ripple acquired GTreasury. Now, in early 2026, we are seeing the fruit of that labor. They have launched a unified dashboard for CFOs that treats XRP and RLUSD exactly the same as cash. This is massive for the Fortune 500. A treasurer at a company like Tesla or Apple can now manage their dollar liquidity and their crypto liquidity in one place, using the XRP ledger to move funds between subsidiaries in seconds, 24/7. This bypasses the banking holidays. It bypasses the weekend shutdowns. It creates a always-on corporate treasury. The demand this creates for XRP is non-speculative. It is operational volume. It is sticky, and it is starting right now in the US. Furthermore, let's look at the ETF inflows versus price action divergence. The US spot XRP ETFs, Bitwise, Canary, Franklin, have pulled in over $1.4 billion in assets under management, AUM, since launching in November. That is faster than almost any other ETF launch in history outside of Bitcoin. Yet the price is hovering around the 190, 2.0's range. Why? Because the market hasn't priced in the supply shock yet. The ETFs are sucking up the liquid supply, but the price is lagging. This is a classic coil setup. The spring is being compressed by institutional accumulation. When the DXC integration goes live across regional banks later this year, the demand shock will meet this supply crunch, and that is when we see the vertical move. We also have to address the regulatory tailwind. The clarity we fought for in the courts has allowed these integrations to happen. DXC and GTreasury are conservative, compliance-first companies. They would never touch Ripple if there was any lingering regulatory risk. Their involvement is the ultimate stamp of approval. It tells every other conservative institution in the US it is safe to build on XRP. This removes the career risk for bank executives. Now, the risk isn't adopting XRP. The risk is not adopting it and getting left behind by competitors who move money faster and cheaper than you. Finally, look at the US volume spike. For the first time in years, we are seeing trading volume on US exchanges like Coinbase and Kraken rivaling the volume in Asia. This shift indicates that the sleeping giant US capital is waking up. The narrative has shifted from XRP is a security to XRP is the standard. And when the US market decides an asset is the standard, the repricing happens violently. Now, let's pivot to the macro environment, the Clarity Act, and the political shift. Rumors are swirling on Capitol Hill about the bipartisan Clarity for Digital Assets Act moving to a vote in the Senate. This bill is the final piece of the puzzle. It would explicitly allow US banks to hold digital assets on their own balance sheets. Currently, currently, they use custodians. If this passes, and analysts give it a 60% chance in 2026, it unlocks the balance sheets of JP Morgan, Citi, and Wells Fargo. We are talking about tens of trillions of dollars. Ripple's strategy with DXC positions them perfectly for this. They have built the pipes, DXC integration, just in time for the water. Bank capital to be turned on by Congress. Let's discuss the RLUSD multiplier. The Ripple stablecoin, RLUSD, has crossed a $1.3 billion market cap. It is growing faster than USDC did in its early days. Why? Because it is enterprise grade. It is designed specifically for these US banking integrations. But here is the secret. RLUSD is the Trojan horse for XRP. Banks might start by using RLUSD for stability, but to bridge that RLUSD to euros or yen, they need XRP. To pay the gas fees on the ledger, they need XRP. The more RLUSD grows, the more XRP is burned and locked in AMM pools. It is a mathematical certainty. The success of the stablecoin is the success of the coin. We also need to talk about the grayscale effect. Grayscale has converted its digital large cap fund into an ETF, and XRP is a major component. This brings passive flows from retirement accounts. But more importantly, Grayscale is marketing XRP to institutional investors as a technology play, not a currency play. They are pitching it as the Microsoft of blockchain. This narrative shift is crucial because tech stocks trade at much higher valuations than currencies. If the market starts valuing Ripple XRP like a tech platform, network effects, user growth, software revenue, the fair value of the token is significantly higher than two-parter to learn. Furthermore, let's look at the derivatives data. We are seeing a massive buildup of long positions in the futures market targeting the 3.0 ZARs and 4.0 ZARs levels. But unlike previous pumps, the open interest is being backed by rising real volume. This means it's not just leverage, it's real buying. The funding rates are stable, suggesting that the bulls are in control but not overextended. This is a healthy, sustainable uptrend structure. We are building a staircase to the moon, not a rocket that runs out of fuel. Let's address the competition. People ask about the FedNow system. Is it a Ripple killer? Absolutely not. FedNow is a domestic messaging system. It doesn't settle value and it doesn't work across borders. If a US bank wants to use FedNow to send money to London, they can't. They stop at the border. That is where Ripple steps in. Ripple connects the domestic rails, like FedNow, to the international rails. They are complementary, not competitive. The DXC integration proves this. Banks are using both. Finally, we have to touch on the social sentiment. It feels different this time, doesn't it? The toxicity is gone. The desperation is gone. In its place is a quiet confidence. The community knows what we hold. We see the logos of DXC, GTreasury, and Uphold. We see the ETF tickers on the screen. The validation is here. Now we are just waiting for the market cap to reflect the reality. And in crypto, reality catches up fast. So, Ripple just changed everything. What does this mean for your portfolio? It means the thesis has matured. You are no longer betting on a startup, you are investing in critical financial infrastructure. The DXC integration is the signal that we have moved from speculation phase to deployment phase. The price targets for this phase are different. We are looking at a move back to the all-time high of 3.84 as a baseline, not a ceiling. Analysts at 21 shares and Standard Chartered are projecting targets of 5 to 8 by the end of 2026 based on these adoption metrics. What is your strategy? The playbook has changed. It is no longer about buying the dip because the dips are getting shallower. The strategy now is position sizing. Do you have enough exposure to capture the upside of the US banking shift? I am personally looking to accumulate as long as we are under the previous cycle high of 196. Once we break 250, we enter price discovery and accumulation becomes risky. The time to act is when the news is out but the price hasn't moved yet. That time is right now. A critical warning on custody. With US banks getting involved, there will be a push for you to keep your crypto with the bank. Let Chase hold your XRP, they will say. Do not fall for it. The whole point of crypto is self-sovereignty. If you let the bank hold it, they can freeze it. They can rehypothecate it. Keep your XRP on a ledger or Trezor. Be your own bank. You can use the network without giving up control. Also, beware of upgrade scams. Scammers will say you need to upgrade your wallet for the DXC integration. This is a lie. The integration happens at the bank level. You do not need to do anything. Let's talk about patience. We waited 5 years for the lawsuit to end. We can wait 5 months for the banking volume to ramp up. These integrations take time to go live. We might not see the massive green candle tomorrow, but when the Q1 and Q2 volume reports come out and we see the ODL volume doubling month over month, the price will react. You are front running the data. That requires patience. The bottom line is this: the US is back. The infrastructure is hardwired. The ETFs are buying. The supply is shrinking. Ripple didn't just change the narrative. They changed the plumbing of the US financial system. And XRP is the water flowing through those pipes. You are holding the most valuable digital real estate in the world. Don't let go of it cheap. Thank you so much for watching this urgent update. If this video helped you connect the dots on the DXC and GTreasury news, please destroy that like button. It helps us wake up the rest of the world. Subscribe and turn on notifications because the news cycle is accelerating and you need to stay ahead. Stay strong, stay safe, and I will see you on the moon. Peace.